Hey guys, welcome to a special afternoon edition of the weekly meetup here at 4 p.m. Sunday, May 16th. We got Chris Hampton back. He's going to be talking uranium stocks with 2 new picks. But first, a disclaimer, StoryTrading is not an investment advisor, and that goes for all of our presenters, including Chris Hampton. Investing in securities involves significant risk of loss. This event is being recorded. Parts of it will be made available on social media. The entire recording will be made available to our VIP members. So we'll skip right through the agenda, and with that disclaimer, actually, Chris, that's all I got, so you can go ahead and share your screen and we'll get started on the presentation.
Okay, how does that look?
I see it. If you want to hit that icon on the bottom right, you can go full screen. Perfect.
It's the one right before the slider. It's like a picture of a chalkboard kind of. Yep, that one.
There we go.
There. All right,
Okay.
Let's hear it.
I'll start with just a little rundown on the Uranium Bull. I'm gonna try to not get too deeply into it, but very quickly, uranium has been in the throes of a long and brutal bear market for about 10 years. And of course, the longer and more brutal the bear, the more awesome the bull that follows it. But it's been at under $40, around $40 or below for over 10 years, and under 30 for the last 5. Producers need a price, most producers need a price of around $60 to $70 to turn a profit. So we've been seeing a ton of mines just shut down, more just not go into production, go idle. McArthur River, the world's largest uranium mine, has been shut down since 2018. And with COVID, this accelerated. Kazatomprom had to shut down some mines because workers got sick. The same with Cameco, they had to shut down a second mine. So this all hit production and has accelerated the bull process. Through these 10, 12 years, there just hasn't been much investment in the uranium sector at all. You know, it's getting to be about time. Nuclear reactors need uranium. It's not optional. And they can't just turn off the lights for a couple of days if they have to scramble to get a couple chunks. They need a steady, safe supply with a long inventory. But right now, it's getting questionable that it's going to be possible to supply the nuclear industry in about 10 years because there's been so little investment. It takes a long time to bring a discovery active, 10 years, 20 years in many cases. And some of the biggest mines that have been producing for the last 20 years are now depleting, something that happens to every mine. So there needs to be a constant reinvestment in the industry, and it just hasn't been happening. Right now, the market needs 180 million pounds a year. Production is 130. The difference for many years, and this is the bulk of the reason for the bear, is the rest has been coming from inventory. With the Fukushima disaster and the overinvestment in 2007, utilities built a large inventory and they've just been drawing down from it. They haven't been renewing their long-term contracts for supply, but that inventory is going to run out. It's being drawn down. When does it hit a critical level? Well, that's the question. I think it has, and actually I'm thinking that has stopped mattering so much, and I'll get into that. So here's to start off. Uranium is part of a larger commodity bull. To give you an idea of how major just the underlying commodity bull is going to be, you can see this is the chart of commodities versus the Dow Jones. Commodities have vastly underperformed. They're at an all-time low versus the general market. That's changing quickly. And it's not something that's gonna resolve in a couple months. This is gonna be a sharp and long bull. I missed something. Here's an idea of what we need as far as uranium in gray, and what utilities, how they're supplied. This gray, the gray amount is the uranium that with current sources cannot be accounted for at this point. We need new mines to fill that gap. So there are 443 reactors in operation, about the same as 10 years ago when Fukushima occurred. 54 under construction. China has been a big mover, and they're a big force in demand for uranium, and they're going to be an important part of investment theses going forward. Really, what's very exciting is uranium and nuclear energy seems to, well, society as a whole seems to be undergoing a rethink in general about nuclear energy. It is the most green form of energy. All it produces is, you know, a sugar cube size of nuclear waste per person per year, and that can be stored and encased in concrete. The European Union has certified nuclear energy as ESG, so ESG funds might start jumping into the sector, which is huge because uranium is tiny. All these stocks, the entire sector is only worth about $20 billion total right now. So things are starting to accelerate in every angle. One of the most exciting things, and when I really saw that this bull was just happening and in full force, when Denison and Cameco went in and started doing buys of uranium, physical uranium in market. And after that, a bunch of the juniors jumped in and started doing the same. The problem with the uranium is so much power is in the hands of the buyers. Utilities for so long have been the only active buying presence in the market. And the physical uranium market is difficult to access for traders, investors. So utilities control it. They just, for so long, they've just been sitting back and, you know, we'll see how far we can deplete inventory. You know, I don't feel like buying today. Let's see if prices go a little lower. But the uranium companies are taking in their own hands, and they're buying, not just, they're buying in part because they know it's good for their industry, but they're also buying because they know the price of this stuff is going up very soon. They're doing it as investment. It's better than holding cash. Good for everybody. And this has never happened before. Perhaps more exciting, there are physical funds, but they don't trade in the US. Until now, Sprott, which is huge in commodities, just announced the Sprott Physical Uranium Trust. They're acquiring the UPC, and they're giving it a US listing, which should attract institutional money, and it'll be more liquid, more visible, more demand. And they already applied for a $3 billion at the market offering. That's huge. This is a fund for physical uranium, of which 150 million pounds are produced a year. And for $3 billion, they can take a lot of that off the market. And whatever inventory, it's going to disappear. And we're in for some fireworks in the sector. The last uranium bull was in 2007. Uranium ran from $7 to 140. The worst performing uranium stock went up 22 times. Paladin went up 1,000 times.
Wow.
Yeah. And then there were 500, at the peak of the bull, there were 500 uranium companies. Now there are only 40. The long bear has just weeded out all but the best. And
Hey, Chris, do you mind if I jump in and ask a quick question here?
no,
Do
certainly.
you know what the total market cap was in 2007?
I had that, but I don't have it with me now. It'd be easy to look
Okay,
up.
cool. Well, let's yeah, if we can
Yeah,
follow up
can
with
you?
that later.
Yeah, or do you want to Google it?
I'll try to do that while you continue.
Yeah, I could do it, but I'll continue instead. So I was around for that bull back in 2007, and it just didn't have the fundamentals that we're seeing right here. There wasn't the supply-demand imbalance. There weren't the long-term structural problems that the uranium market is facing. I mean, the returns were ridiculous in 2007, but I mean, what can I say? It just looks like it's gearing up to being sharper, more dramatic, and I think it's happening right now. Maybe more inventory will come on market, but with the long-term supply problems, every month that the uranium price stays below 50 or 60 puts the industry in more trouble and makes a crisis more certain. A crisis that can only be solved by throwing huge amounts of money at it. They need to get, it's just good for everybody if they get the price above 60 or 70 right now and normalize the industry. That's not going to happen though. It's going to be a convulsive and dramatic process in which some people are going to make a lot of money. I hope that's us. Here's a chart of the uranium price history. It's not the highest resolution, but you can see the volatility. Uranium's a mover, and it's just not a healthy market. The new Sprott fund will help solve some of these problems, but it creates opportunity for investors. So, okay, that's uranium. So we could just go in and we could buy spot uranium. We can make 2 or 3 times our money, but miners are better. The reason you buy them, you're not really investing. You are investing in a company, but really you're investing in a vehicle for uranium. And these vehicles have leveraged the price of uranium. They are pretty literally, the best at least, are out of the money call options on uranium. They can't produce, perhaps their costs are $40 or $50, so they're not doing anything right now. They're just sitting on a big reserve. And hopefully they're not spending a lot of money doing that. Hopefully they're not having a big management drawing a lot of salaries. But if they're not, they're sitting there with optionality, and they can step in when they want at the price they want and produce. That's why I say these companies are pretty literally call options. And if you want to understand how they're priced, you need to involve the Black-Scholes. In finding miners, for all of them, the price of uranium is going to be the key factor in determining their share price. What you want to look for, and what I've looked for, are companies that have very limited risks aside from the uranium price risk. The more concentrated the risk is on the uranium price, the better. And of course, inexpensive relative to the rest of the uranium stocks. So the other factor, which is important in choosing which miners you want to buy, is the jurisdiction. They're very different. I've chosen to focus on Africa and Canada. Canada just because they have the highest grade mines. The Athabasca is the richest area for uranium. And because mining is such an important part of their economy, they're friendly to miners. Politics are not a problem. Africa, again, very important to their economy, mining friendly, not the most stable politically, some of the areas, but mining companies always make it. Also, what's great about Africa is China. China wants control of uranium resources. They can't buy uranium mines in Canada or the US, not Australia either, but they can in Africa. Especially Namibia's being a key focus of their shopping, which is also the site of one of my favorites, Forsys. Australia, a lot of the companies look good, deposits are great. Political risks, hard to quantify, especially for me, not being an Australian. And their financial markets, I'm not sure. I just like companies that are listed in Australian markets. As far as the US, political risk, that can go both ways. But for some reason, several uranium miners that are operational in the US have been conspicuous laggards in this bull, and I have started buying them. I'll go over those later. South America, just avoid it. You'll get your mind socialized if you're unlucky. Oops, that's the wrong way. All right. There's a little, this is just the grade for those areas. Kazakhstan is actually where most of our uranium comes from, Kazatomprom, but they're not a public company. We can't trade them. They're the biggest producer. Namibia, love it. It's low grade stuff, but great mining area. And Canada is just the king as far as high grade. All right,
Chris,
yeah.
Why does most of the uranium come from Kazakhstan if it's lower grade than Canada?
Because they just have a huge deposit, and they can mine it economically using in situ leaching. Yeah, they just have a huge mine.
Okay.
Yeah, Kazatomprom is the biggest producer.
And low quality, that's not an issue?
Well,
doesn't need to be high quality
ends
for
up being the same thing.
Okay. After it goes through the process of being refined or whatever.
Yeah. You can get really into stuff when you get into figuring out the costs and the net asset value of the company and its resources. But in the end, it's all the same stuff. It's just how expensive it is to get out of the ground.
Yeah, I think it's the concentrations, isn't it? The concentration in the ground.
Yeah.
Yeah.
The parts per million is the grade.
Yep.
So Denison, you have another question?
No, I said I got it. Thanks.
Okay, good. So the first company I'll look into, I'm going to just go over a couple of the key ones briefly. Denison, it's the most widely owned uranium stock among retail investors. I don't like it as an investment. They're a low-cost producer, which is bad. You actually want high-cost producers, more leverage. And they have to be cheaper. Denison, the pounds they own, they're valued at about $10 of valuation per pound of uranium they own, while some of the high-cost, smaller juniors are valued at 50 cents for every pound of uranium they own. And just the math is pretty simple. If Denison pulls uranium, can pull it out of the ground for $10 a pound, and a junior pulls it out for $50 a pound, Denison makes money right now while uranium's at 30, and the junior won't make any money till it's at 50. But when it gets beyond that, when uranium moves from, for instance, $60 to $70 a pound, Denison's earnings went up 15%. That junior, they went up over 100%. That's the beauty of leverage. So Denison, not very levered, but the focus of attention, and they're going to be the focus of news event. They're going to acquire companies. They're always going to be involved in whatever going on. It's going to be volatile. People are going to move the stock. They're going to trade it, and it's going to be a good trader. And it's going to keep the high volatility. They'll probably have periods of very high implied volatility for the options traders. So it's a good one to trade. I wouldn't advise making it core part of your investment. Although it's safe, but it's not going to be a great performer in a mega uranium bull. Well, everything's going to be a great performer, but it's not going to be one of the top performers. Forsys was the first uranium company I invested in. It's still my favorite. And again, it's in Namibia, and it's just beautiful. It's almost a perfect out-of-the-money call option on uranium. They barely have any management. It's pretty much just a skeleton shop sitting there and with a huge resource sitting, waiting for the next bull market. It'll probably get bought out at some point. But they're just great. They're, I mean, as far as going further with this call option thing, when you buy an option, a lot of the downside is the theta bleed, the decay as time goes on. With these uranium miners, that time decay is dilution, and Forsys just hasn't diluted. For shareholders that have owned it since 2007, they actually own more uranium per share than they did in 2007. So this is just a great little company, and all things being equal, it's my bet right now for one of the top performers of this bull. Global Atomic, another early buy. I love this one too. Again, Africa, they have a little zinc interest, which has allowed them to be a minor diluter as well. This is going to be a great performer. Peninsula is one of the laggards I mentioned. This is the weekly chart. You can see it's not even out of its bear market, really. It's touched its gentlest downtrend line, but it's just hasn't done much. And this is for a couple of reasons. You can see in the middle of 2020, right here in June, they did a massive capital raise, more than doubling their outstanding shares, so they could eliminate their debt, and they just reached their limit with this bear. Maybe if they could have held out just a little longer, they wouldn't have had to do that, but they did it, and they introduced a huge amount of shares. Shareholders were not happy with this transformational raise, as Peninsula called it, and they sold it off. And I think it's taken almost a year to work through that supply of shares and get them into the hands of investors rather than bag holders. Also, Peninsula's been working on it. They had to close their flagship mine, Lance, because it became uneconomical, and they've been developing or testing a new leaching process, which will allow them to pull out the uranium very cheaply. I think the market's assigned a lot of risk to this process, but there really isn't much. The same process is used around the world and it's already been permitted by the US for Peninsula to use it. And by the way, Peninsula produces in the United States. These are mines in Wyoming, Nevada, New Mexico. So it's a US producer, though it's an Australian company. So I broke two of my rules with this one. Australian listed company and in a bad jurisdiction, but at this point in the bull, it is time to start looking at laggards and try to find deals. So this was actually my most recent buy in this bull. Azarga, similar, also a US producer, also barely out of its bear. Okay, now we'll get to the good stuff. Appia. This is amazing. So Appia has been on a lot of people's lists of their favorite uranium companies. They have a couple uranium brownfields, and they had Canada's star geologist, James Sykes. So 2 years ago, they had Sykes, and they had a bunch of plastic PVC pipes staked in the ground, setting their territory. There really wasn't much of a company there, but James Sykes goes in and he puts up a drilling program, and what they end up finding is the highest grade rare earths deposit in North America. They've still got uranium. They've stopped drilling for uranium right now to focus on Alcis Lake and the rare earths, but that's a big discovery, and it's a big deal. It's a big deal for Canada. Saskatchewan came in and they're building a rare earths processing unit close to Appia. There are other rare earths producers in the area, none with or nearly the grades of Appia's. And Saskatchewan civic authorities actually mention Appia when they discuss the processing facility. I mean, they're not building explicitly for Appia, but they kind of are building it for Appia or because of Appia and this discovery. The idea is going to put Saskatchewan and Canada on the map for rare earths in a big way. This is going to attract more and more attention as they sort of continue this drilling program. There's a lot of risk built in the stock now. From what I hear, they're just the biggest risks, I think, with a junior explorer at the point they're in right now with their rare earths find is that they lose the deposit continuity. That they just lose the thread at some point underground and they can't find it again. But James and management, they talk about walking along the deposit above ground. They can see it and walk along the veins. So they're not going to lose it. And they know roughly how much is there, and it's close to the surface, and it's fairly close to infrastructure. Appia is going to be a big deal in this bull. And when they get around to looking at their uranium again, that's going to be about the right time where uranium discoveries are like a rocket ship, about halfway through this uranium bull. I think Appia is without a doubt going to just be a big winner with very little doubt.
I just want to clarify, Appia Energy, we're going to be tracking as a VIP pick.
Yeah.
Right. That's going to be up on our spreadsheet next Monday. We're going to probably put that out there next Monday. And you have one more VIP pick later today as well. You're going to talk about. Yep.
So this is, I mentioned James Sykes. So he worked for Appia, and he still is, but he will leave in May because he's been given his own company as CEO called Baseload Energy. And they're exploring. They've had some trouble, actually. A new risk in Canada is, or a risk that's increased, is with the First Nations, the Indians. New UN resolutions gives them a little more agency regarding their rights and especially their land rights. And Baseload really got in the way of that, and James Sykes did. You can read about that if you want to. There was a blockade, and Baseload has missed a year of drilling on their flagship property. But anyways, Baseload is still one of the promising explorers. And the big winner in a uranium bull is the explorer that makes a discovery. And very well, Baseload's going to find something. So I was looking at Baseload as maybe a small investment, but instead I looked at QC Copper and Gold, which owns 35% of Baseload shares. Now, QC Copper and Gold to date has pretty much.
Chris, your screen is still showing Appia. Okay.
Yeah,
thanks.
there you go. So QC to date has pretty much tracked the performance of baseload until recently. So in addition to owning the baseload, so they own baseload shares and they have cash. Their market cap's about 20 million. Their enterprise value, after you take out the baseload shares and the cash, is about 5 million. And with that 5 million, they own the Perry and Springer mines, as well as the Opemiska copper deposit. These were mines that were mined extensively in the mid 20th century. Billions of tons of ore were pulled out through tunnel mining, but they only excavated down to 1.5% grade. So these guys, apparently it's been a project of theirs for most of their adulthood. It seems like they might have been talking about this, getting this going at some point when they were, in college drinking beers. I'm not sure about that, but they've been working on this for a long time. They went and they got all the old drilling records, which were all in notebooks, and they digitized them. They spent years digitizing them because they suspected that there was a disseminated deposit in these old mines and quite a bit of metal still in there. And what these digitized records told them is that it's there. So they made the deal, they got the land, and they started drilling. Drill results have just been released and it supports their thesis. It seems pretty obvious that they're right. And as the CEO, Stephen Stewart, puts it, there's about $10 billion worth of metal in there. 10 billion.
How much cash do they have, and how much are they going to need to raise?
6 million, but they have outstanding warrants and they have those baseload shares. They could sell those, but I expect they'll continue to raise. They're an aggressive company. This is part of there's something called the Oro Group, a group of companies, couple gold. QC has emerged as the flagship company in this group. They're all run by Stephen Stewart with different geologists. This is the focus. There's going to be a lot of new shares coming into this, but it's just not going to really matter because within a metal bowl, when you find a major new resource, so much wealth is created. I mean, I've been trying to back of the envelope the net asset value for those resources. I'm coming up with numbers 2 billion, 4 billion. It's really hard to come up with anything less than 500 million. And they currently have a market cap of $20 million.
Just for clarification, and this is his second VIP pick. So are there going to be two VIP picks from Christopher? The Appia Energy and the QC Copper. We're going to put them out both next Monday on a public spreadsheet, just for clarification.
They're kind of similar. Idiosyncratic plays on the Uranium Bull. Both multi-asset. So I don't know, I could get more into it, but I think that's all I'm going to say here. I'm going to put more info in the chat rooms.
All right, cool. So I am going to try to continue the skeptic section here. Yeah, I'm not a expert in this area, so I'm not going to be a great skeptic, but I'll try. My number one skeptical question in here is, these are non-producers, the ones you're pointing out.
Right.
So what happens if that, the price spike, the boom and the bust happens before they produce, and could there be market players out there, shorts, hedge funds, or whatever, that might see that and say, you know what, we're not going to let the stock rise because they're never going to see the benefit of this cycle? Is that possible?
No, it's just not historical. I mean, these are real assets. These companies, when they get a definitive study showing they have a resource, that's a real asset. That's their book value, and it rockets because of that. I mean, it's something, a company that has 1 million pounds of uranium in the ground that they can extract for $30. If uranium goes to 50, then they have a resource that's just worth $20 million. And if it goes to 60, it's worth 30 million.
Okay, so then why doesn't QC, why isn't that much higher? Tell me that, what, $10 billion worth of metal on the ground and it's only a 6
That's what they think
million
so. Yeah, that's,
enterprise value. What are we missing?
what's the rest of the market missing? I mean, a lot of it, it's kind of like, it's so similar to Bitcoin. How does something that was worth nothing and is potentially worth $1 billion, what does that stock chart look like if the change happens overnight? You know, if and it's nothing's definite. This is not a confirmed resource. It's not conventionally confirmed anyway.
So when do we find out? Maybe is that the catalyst needed, that it's confirmed and then it will all of a sudden go up? What's that?
It's going to be a gradual process.
Okay.
There's the preliminary economic assessment. There's 4 stages, I think, to the final definitive assessment. But as this goes on, I mean, I expect QC copper is going to be in a long-term uptrend starting now.
And what kind of, again, I'm trying to me, there's a little disconnect. It's such a small enterprise value, but you're talking about 10 billion pounds. Are we talking about a stock that's like 100 bagger here, or am I reading that wrong?
100 baggers happen in commodity bulls. And I think that this is one of them.
Wow. Good thing I asked that.
Paladin was 1,000 bagger.
Wow. Oh my. Interesting. Okay.
Yeah, I don't like to say that. I'm not going to win a lot of points yelling about 100 baggers, but what can I say? It's just, I mean, copper is not done either. Copper is going to keep going up. And doing those back of the envelope calculations for QC copper, they're extremely sensitive to the inputs. A couple extra bucks on the copper, a little lower cost, you get doubling of the net asset value.
All right, let me bring Rob into the conversation. Maybe he can poke some holes in your theory. Rob, you got anything for him?
Yeah, I think 8 years ago I studied silver, gold, and recently uranium. But it seems like your 2 favorite picks, one has to do primarily with rare earths and the other one is primarily to do with copper. So was it that you were studying uranium and the Uranium Bull and you came across these companies? And
that's exactly it. And
that's what it sounds like, yeah.
Yeah. Because both of them still are in positions where they can fully take advantage of the Uranium Bull. But there's this added second bull on top of that.
So I would like to know for Appia Energy and the QCCUF, is the uranium their best chance at growth, or is it the rare earths and the copper, like their biggest kind of pile of cash and future growth?
Appia, it's the rare earths is really what they're focused on, which is impressive considering they know a uranium bull is happening and they know they have uranium resources. But at this point, they're focused on rare earths. It's just a major find. Defense Metals is their nearest rare earth producer, the nearest to Appia, and their rare earths are 1/10 the grade of Appia's. Mountain Pass is 1/3.
And rare earths is also in a bull run because of
probably
cars and clean energy and everything else.
Yes.
And then I've studied the costs of silver and uranium that it takes to like mine these metals, as far as like QCCUF, what is the cost of, if say they had 2 billion in copper in mines and it was proved and everyone agreed to it, what would be the
Yeah.
cost of mining that 2 billion in copper out of the ground?
That's what we don't know. We really know so little at this point, which is part of the reason that the stock isn't being given any value for this tremendous resource. It's also very low grade, which people don't like. People like high grade stuff. At QCCU is low grade, but major tonnage. And
So large quantities, but
large,
major
large,
tonnage.
yeah.
But there are mines like Uranium Kazatomprom in Kazakhstan with low grade, and they're making the most money and they're mining the most. So
They are. Of course, they're not publicly traded. I'm trying to find a reason why QC hasn't appreciated. I expected the last drill results to get more attention than they did, but I'm not. I'll be very surprised if it's not moving within a couple weeks.
are there any similar miners in
Yes, good question.
QCCUF close to that region who mine copper?
Well, I was looking at one in Australia, Caravel, a junior, but and their market cap is about 200 million. They're different than QC in a couple ways. A similar profile, but they're lower grade. Their copper is about half the grade of QC coppers.
Yep.
Their tonnage is about half of what QC should end up having. And their startup costs are over 600 million because they don't have infrastructure. QC, it's doing this on top of old mines with infrastructure in place. We're not going to know exact numbers, but it won't be 600 million. It's going to be a comparatively low cost to start up. So, I mean, so twice the grade, twice the tonnage, half the startup cost. What happens when you plug that into 200 million? Times 2.
Sounds like it
a lot of money.
doubles. Yeah, that does sound good.
Yeah.
And the last question, you said they were studying this mine and everything about it when they were in college, and now they're way out of college or
Yeah.
much older now.
Yeah.
Why did they wait so long to take advantage of this opportunity if they were
They've
sure
been
about it?
involved with it for a long time, but it's hard to get the deals done, get the money. They were working with a company called XN prior to QC in the digitization process for a number of years, and then they finally acquired the property for themselves. And it seems like they've been really committed to this. The head geologist, Charles Boudry, he may have worked for one of the old miners, Falconbridge. It looks like it's on his LinkedIn. So he knew about these mines, and perhaps he knew what was in them. One of the few people that did.
Got it. Makes sense.
Yeah, I mean, it all falls together. I've read everything these guys have put out, watched their videos, and I find them completely credible, and their thesis falls together for me. And everything has supported it so far.
Yeah, we definitely need the metals and copper and rare earths and uranium. So
Yeah, it's a good time for that kind of.
So what's your number one suspicion of why QC is not higher? What are the sellers thinking?
Oh, well, I can tell you that. In March, they had 4.5 million warrants expire, and they had something like 20 million shares from private placement go free trading. So some portion of those were all sold, and for a stock that trades, a couple 100,000 shares a day, that's gonna keep it down. And while that's happening, a lot of buyers know what's going on and they don't want to buy into that. So I think buyers were just sitting on the sidelines waiting to see what was going to happen. And a lot of those sellers were maybe forced to sell, maybe you're just impatient and sold, and you saw the stock drop a bit.
Yeah, and you said you suspect within a couple weeks it's gonna start really moving. And any catalyst or reason? What's your reasoning behind that prediction?
That's part of the reason is that supply is going to be gone, or at least substantially worked through. And the information now, there's enough information out that this story should be clear to people paying attention. I really don't know who is. These guys need to get out there and do some investor conferences. I wouldn't know
Yeah,
about.
well, with the market cap size it is, I mean, I bet our community could buy out the whole company.
Yeah.
If we got behind it. So.
Yeah. I've actually been talking to Appia about. Never mind. Yeah, I'd like to buy part of these companies. Actually, I would love to have a private placement and just.
Well, maybe we can get QC management on, something like that. I think sparks some interest. Yeah. All right. Rob, any questions or anyone else? Oh, by the way, there's a chat from someone on the from Eric here. His Kazatomprom is, I don't know if I said that right, is publicly traded, but in London, on the London exchange. Yeah.
That's right.
Mm-hmm.
Yeah. Yeah. What can I say about that? I just don't pay attention because I can't trade them.
Yeah, I generally can't either, but yeah.
Yeah, if anybody has any other questions, you could unmute yourself or raise your hand.
Yeah, please feel free.
I did have something on the uranium in general. So kind of some of the negatives of uranium. So like, let me see. So uranium is seen as a green energy, but you don't know that until you start researching it yourself. Uranium is seen as like unclean and dirty and dangerous until you dig into the statistics behind it. So I think there's like large groups in the US and even other countries that aren't willing to invest in uranium unless they see the price go up. Because Ben was asking that question before, like if uranium is so great and the price is going to fly up, why isn't everyone jumping in to buy the stocks? Because there's negativity around it. But I believe like Bill Gates might be working on like the future of nuclear reactors that are safer and more stable and things like that.
Yeah. Yeah, I mean, that's what bull markets are made of. You got to have negativity and people that can be won over. It really feels like there's a shift going on, just the way uranium and nuclear energy is spoken about.
Definitely. Because when you think clean energy, very few people think of uranium.
Yeah, but it's really the cleanest.
Yeah.
If there's no accident.
If there's no accident, then it becomes very
until there is an accident.
Yeah, that's the risk. That's the major risk, I think. Eric, you had your hand raised?
I have 2 quick points. Can you hear me?
Yep. Yeah.
Okay. The first is Kazatomprom is actually the largest component of the uranium ETFs. There are 2 of them in the US and 1 in London. So you're actually getting a piece if you go the ETF route. And there's obviously a lot of risk in individual explorers, and they focus more on the larger cap companies. So you're not going to get the huge home runs that Chris is talking about, but you'll still do quite well.
What's the ticker symbol on that ETF, Eric?
There are 2. The first is URNM,
which I'd recommend.
URNM
is the better of the 2.
And the other is URA in Canada.
Okay.
But cool. Yeah, as Chris is right, that's not nearly as good as the other one. And the second point that I'm not sure if you mentioned it, Chris, because I've been in and out, is that the Uranium Participation Fund was just bought by Sprott. Did you cover that, Chris?
I did, yeah.
Okay, because to me, that's a huge, huge, huge deal, and it needs to be, dramatically emphasized.
Yeah. Well, what would you like to say about it?
Well, basically, Sprott is the largest company focusing on physical metal ETFs. They've done gold, silver, and I think platinum. They've done that for years. and they have hundreds of millions, if not billions, in each of these funds. I don't have the details in front of me, but they are going to get, and they have, you know, a pool of investors that they know of that are already in these funds. So my guess is they're going to get, this is going to result in a huge demand for physical metal, taking pounds off the market, which is going to move the price quickly. Now, the deal is probably not set to close until, you know, July, August, but there's going to be a huge spike in their buying once Sprott takes control and markets it to all their clients.
Agreed. Yeah, I think they have a $5 billion ATM attached to it.
Thank you, Eric. That's awesome. What was the
Yeah.
other point? Yeah. You had one more thing?
No, that's it. I'm done.
Oh, okay. Cool. Steve has a question. Has the RE, I don't know what RE stands for, has the RE find been permitted to production?
No, it's still an early find, and they're still measuring the resource. They've got civic authorities on their side, the state's on their side. I don't anticipate it'll be a problem, considering they're building a processor nearby, but it is monzonite, which is a little more complicated than basanite.
Robert Irving Gates, Bill Gates, I guess, right? Or who's Gates? Is working on reactors that use spent fuel. If that succeeds, does it affect the thesis?
I could answer that one. I don't know.
Which Gates? Is that Bill Gates?
Yeah, Bill Gates is working on a new class of like reactors.
Really?
I haven't looked into exactly the fuel it uses, but
Yeah,
I could dig into that more.
Greater adoption of nuclear energy on the whole would be the result.
Yeah, something to keep an eye on though. That's thank you for bringing that up, Robert. Cool. Yeah. Well, you know, one of the things I'll want to be looking into is trying to find out. I know you, Chris, you put your theories out there. Why isn't Q higher, right? QC or some of these other names? Is there something we're missing in the story, right? Otherwise, I think that stock price would inflate faster. Maybe you're completely right, Chris, but I like to keep our eyes open to see if we're missing anything. I think Eric, you raised your hand again.
Yeah, I just have one other point. Rob, if you're going to do some research on that, I would also suggest looking up SMRs, which are small modular reactors. They're actually much closer to being implemented, like less than 10 years, where I think the work that Gates is doing is a lot further along. Basically, small modular reactors are, as you would guess, a lot smaller than huge nuclear reactors. So they have two benefits. One, it costs a lot less to build, and two, if you're in places where you don't need a ton of power, you can just build this and they'll cover the needs of, you know, say a community in the middle of nowhere, as opposed to building a huge plant that can, you know, service a large city. So I would suggest looking at SMRs, because there've been a ton of stuff in the news recently about them, and I think they're going to be a lot closer to being used than what Gates is doing.
Makes sense. Yeah, I have come across those in my research, and I've heard about them. I think they use less uranium, but produce just as much power as some of the large reactors because they've become more efficient, which is good.
Cool, great. Chris, thank you for that presentation, guys. VIP members, hang on. Just got to go through a couple logistical things here, housekeeping notes, but afterwards we're going to talk earnings preview. There are a bunch of key stocks tomorrow and trade of the week. So we can go ahead and continue collaborating with the Uranium Research Group. We expanded that group. It was Paladin before, so now it's a general Uranium Research Group to talk about all these great picks. Events, you can go website, click events. We have this Wednesday afternoon, Aaron Warwick with the new pick. Please follow us on YouTube and Twitter for the latest. And with that, we're going to move on to earnings preview and trade of the week. All right.